So in the overnight session, the market has continued to balance within yesterday's range on relatively light volume. And now heading into the open, our short-term bias will continue to be neutral bullish, but with a heavier emphasis on the neutral part, which means that today we are going to have to be more defensive as compared to yesterday. Now, the larger time frame question is whether the market is going to put in a breakout above the 58.34 quarter to 44 quarter bias confirming zone, or are the sellers going to step back in, resulting in a push down into the support areas below. Now, if the market is going to head higher and put in a sustainable breakout, then ideally we want to see buyers holding ES above the 58.09.5 to 17.5 pre-market support. And a break and hold below that area would serve as an intraday bearish indication. Now, technically, buyers can still be active at the 57.94.5 to 58.04.5 initial support, which we're also using as the intraday bull bear zone, but we will have to assess the real-time intraday situation to determine whether it still makes sense to take a long setup there. And if you want to be more defensive at the initial support zone, then you may want to put your stop a couple of ticks behind 57.90 and set up the trade in a way where your scale out target is at the broken pre-market support, which at that point could start to act as resistance. And if we do see a buy response at initial support, followed by a break back above the broken pre-market support, that would be a sign of strength, and it could lead to a move back up into initial resistance, and the door would still be open for a breakout attempt above initial resistance. So on the downside, the initial support and the 57.90 to 92 continue to be a key area if the buy side is going to maintain the recent control. And a breakdown below initial support and 57.90 to 92 would serve as an intraday bearish confirmation, and that can then result in a move down into 57.76 to 82, where buyers may still be active, but again, we will need to assess the real-time situation. And then below that, we have the bull bear zone at 57 quarter to 69 quarter, where there is a higher probability for buyers to be active on first test. And if the recent breakout is going to remain in play, then that is the spot where buyers need to defend. And a breakdown below 57 quarter would tell us that the recent multi-day balance breakout pattern could now be failing. And from there, if we take out 57.39 to 43, it would essentially confirm a false or failed breakout pattern, which is a bearish pattern, and that can then result in a move down into 57.10 to 24, which is today's range exhaustion as well as range extreme, and buyers are very likely to be active there on first test. Now, in order for the bearish scenario to trigger, ES needs to take out the pre-market support, and then in order for us to get that bearish confirmation on the day, ES needs to take out the initial support and 57.90 to 92.